The Affordable Care Act, or the ACA, and employer responsibilities, but we're also going to talk a little bit about what the employee's responsibilities are as well. The ACA is legislation that was enacted to ensure that health care is affordable to people who historically were uninsured or underinsured. And it sets national standards for the pricing and structure of health insurance plans and places certain obligations on both us as an employer and on individuals as employees. Individuals under the ACA are required to purchase insurance or pay an annual penalty for being uninsured. Certain employers are subject to penalties for not providing adequate affordable insurance coverage to their employees. Our employer shared responsibility provisions under the ACA require that all applicable large employers, or ALEs, comply with employer shared responsibility provisions. These provisions require that an ALE offers health insurance that is affordable and provides minimum value to 95% of our full-time employees and those employees' children up to the age of 26. The ACA defines an ALE as a company that has employed an average of at least 50 full-time employees, including full-time equivalent employees, in the preceding calendar year. The ACA defines affordable and minimum value this way. Minimum value can be met by providing a plan that covers at least 60% of the total cost of medical services for a standard population. And I have been unable to find a definition for standard population, but to be safe, we should presume this means employers of our size just generally around the US. Affordable means a plan is the lowest price self-only plan offered by us, the employer, and that means covering only the employee with no dependents, even if in reality the employee is enrolled in a plan that costs more than the lowest price that we offer, or covered dependents. To help employees understand what affordable coverage means. So in addition to being the lowest price and self-only, a plan may cost no more than 9.86% of that employee's household income. And as of this year, 2019, the percentage, that's of this year, the percentage will likely be adjusted slightly up in 2020. This cost is the amount the employee pays or would have to pay for the insurance, and not the plan's total premium. So in other words, they can likely pay more once they end up paying deductibles and other things out of pocket. An ALE is not required to offer coverage to employees' spouses, only to the employee's dependents. And we are not subject to a shared responsibility payment just because we don't provide coverage for an employee's spouse. As far as part-time employees in the AC are concerned, the employer shared provisions count full-time equivalent employees. In other words, part-time employees who in combination count as one or more full-time employees for purposes of determining whether the employee is an ALE. That's important because the ALE does not have to offer coverage to its part-time employees in order to avoid an employer shared responsibility payment. And what this means is that a company, unlike ours, let's say a company has, half of their workforce is part-timers and the other half is full-timers. That doesn't necessarily, depending on the size of the company, that doesn't necessarily make it an ALE if the employer is on the smaller side. A part-time employee's receipt of a premium tax credit for purchasing health insurance through the marketplace will not make an employer liable for a shared responsibility payment. So for our reporting requirements, how do we know if we owe? In 2018, the IRS began issuing letters to employers notifying us of our potential liability for an employer shared responsibility payment for the preceding year. Employers are required to report annually to the IRS whether they've offered ACA coverage to employees, and if they have, provide information on the coverage offered so that the IRS can determine whether or not the company owes the IRS under the employer shared responsibility provisions. Employers are also required to provide each employee with a copy of the Form 1095-C that the employer has filed for the employee. That means any employee who was covered under the ACA, meaning they purchased a plan through the marketplace, healthcare plans. Employers are also required to provide each employee with a copy of the Form 1095-C that the employer has filed for that employee. And any payments owed by us are paid to the IRS. Penalties for failure to comply with the employer mandate. So if we fail to comply with the employer mandate, the following fines, we may be subject to the following fines. $2,320 per full-time employee minus the first 30 employees, which is essentially an exemption of the first 30. If a full-time employee receives a premium subsidy tax credit for purchasing their own individual coverage on a health insurance marketplace exchange. Or the other penalty could be $3,480 for every full-time employee who receives a federal premium subsidy, a tax credit, if the health plan offered by us is not considered affordable and provides minimum value. So are we impacted? Is our company impacted by these requirements? Yes and no. While we provide our employees with health insurance that exceeds the ACA's minimum value and affordability requirements, and most of our employees probably don't qualify for subsidized coverage, we need to keep track of those who do for reporting purposes. Any IRS notification regarding the company potentially owing a penalty for our failure to comply with the mandate should be immediately directed to the Finance Tax Department.